Hello and good day. Today I am Hanani and my colleague Alifah Iliana from Kenanga News would like to share with our loyal audience a hot topic related to Islamic derivatives product, and we will be focusing on futures.
Since there are many buyers and sellers transacting through the exchange, the issue of multiple coincidence is solved. The exchange itself is the guarantor for each trade by being the buyer to each seller and the seller to each buyer. In other words, the exchange is the counterparty for each trade.
The exchange requires each party to place an initial deposit known as initial margin and then will be marked to the market. Marking to market means that the gain or loss in each contract position resulting from changes in the price of the futures contracts at the end of each trading day are added to or subtracted from each account balance. As and when losses occur, it will require the party whose position is losing to pay up known as margin calls. In this way, losses are covered.
Unique feature of future is the ability of the buyers and sellers to reverse out of the position before delivery or maturity. Therefore, in commodity futures, physical delivery hardly ever takes place as compared to forward contracts where delivery often takes place.
There are certain markets that are allowed futures trading. In Malaysia, the Sharia Advisory Council (SAC) of Securities Commission Malaysia has resolved that the following futures contracts are permissible is according to Sharia futures contracts on crude palm oil.
Derivative instruments being approved by SAC like stock index future and single stock future, which futures contract with an underlying of one particular stock, usually in batches of 100. In this type of derivative, there is no transmission of share rights or dividends. In making their ruling, the SAC had to deal with issues of gambling, gharar or known as uncertainty, jahalat or known as ignorance, and speculation before ruling that the futures contracts are permissible in Sharia.
Now we will see the interview conducted by our Kenanga news reporter on the public towards Islamic derivatives product focusing on futures.
Hi, I am Nur Iktisha, reporter of Kenanga News, and today we will interview a few Malaysians on their knowledge about futures. Hello, Mr. Akmal. Would you give your opinions on the issue of gambling that is related to futures?
Based on my own research about the issue of gambling, the SSC explained that the requirement imposed on a market player to place a deposit as a margin of payment before he begins trading did not constitute a bet, as some opine. The fluctuation of the value of the commodity, crude palm oil, occur due to the change in demand in the crude oil futures market, which does not constitute a gambling activity, because gambling activity depends solely on luck and are not related to demand and offer.
What about gharar that has been mentioned related to futures? Do you have any ideas on this issue, or maybe you can enlighten the others?
As for gharar, the SSC defined it as something that is not certain. The SSC opined that profit and loss in the business is a common factor and that a trader should take steps to minimize the gharar. When a crude palm oil futures contract is offered, specifications such as quantity, type, price, and delivery date are made known to the market players. There is also a provision and possibility of the buyer taking delivery of the crude oil. Therefore, there is no element of gharar in the contract.
Okay, thank you, Mr. Akmal, for spending time on sharing opinions. Okay, Ms. Ayuni, do you have any preference or have you done some individual research on buying and selling Sharia compliant stock index futures?
As far as I'm concerned, SAC stated that buying and selling Sharia compliant stock index futures is not a gambling because it has no similarity with losing a bet. The Sharia Advisory Council explained that in gambling, the player loses all his money if he makes a wrong guess. The SAC opined that this does not happen in index trading as the total index point has its own inherent value. What happens is the investor will experience a decrease or increase in the value depending on the demand for the total number of shares that comprises the index company. Thus, index trading does not involve any element of betting.
In terms of stock index futures contract, can you comment on elements of jahalah and gharar? Also, how the price will be determined on this contract?
As for stock index futures contract comprising Sharia compliant stock, the SEC opined that it does not contain element of jahalah and gharar as it is traded in a clear quantities. The price is also determined by the market based on demand and supply, and no vagueness in terms of price and quantity does exist.
Thank you, Ms. Ayuni, for your opinions regarding to this Islamic derivative product. Excuse me, Ms. Nasrin, do you care to share if you have some thoughts on the issue of speculation regarding to the futures contract?
Yes, I would love to. On the issue of speculation, the SEC states that speculation exists in all forms of businesses and is not unique to futures transactions.
Okay, what about the single stock futures? Can you enlighten us if you have anything in mind?
As for the SSF, the SEC has ruled that as long as the underlying stocks, it be considered permissible. The other jurisdiction in the Islamic financial world that is also developing its derivatives market is Iran. The Sharia Board of the Securities Exchange Organization of Iran allows a future market on the basis that physical delivery will take place, unless otherwise agreed by the two parties.
Thank you, Ms. Nasrin, for your brilliant opinions.
Some additional information from other countries. The Iranian Islamic capital market launched a futures contract for gold bullion in June 2008. On July 2010, the Tehran Stock Exchange began trading single stock futures. Since then, there have also been other futures contracts that have gold coins, white copper, and copper cathodes as their underlying. The Iranian Islamic capital market is planning to extend the Islamic futures market for other fundamentals such as stocks, petrochemical assets, and agricultural assets. Meanwhile, from Turkey, the Turkish Derivatives Exchange, or known as Turkdex, has also introduced exchange-traded Sharia-compliant derivatives in the form of a live cattle futures contract. This futures contract has been introduced to manage the volatility of price for cattle during the Feast of Sacrifice, or known as Idul Adha.
Turkdex Live Cattle Futures contract enables both producers and consumers to manage risk arising from price volatility. Turkdex Live Cattle Futures contract is settled by physical delivery, and settlement takes place at the Live Cattle and Meat Department of the Istanbul Commodity Exchange in Tuzla. Different from the other contracts traded at Turkdex, this new contract is listed once a year and traded for 3 months. Thus, this contract enables investors to follow sacrificial cattle prices and buy and sell cattle 3 months before the Feast of Sacrifice. For investors, having open positions at the expiry of contract, which is long position holders will take delivery on delivery date at the Istanbul Commodity Exchange, and short position holders will delivery live cattle on delivery date at the Istanbul Commodity Exchange.
To conclude today's news, from all of the information we received, it can be seen that futures contracts allow producers and commercial operators to fix the price of commodities in advance of making or taking physical delivery. Therefore, these contracts are regarded as very effective in minimizing various forms of risk. Futures contracts are at bottom a new phenomenon of this age which have no precedent or parallel in the conventional law of transactions or muamalat. Their acceptability or otherwise should consequently be looked into with the Islamic viewpoint of general permissibility in relation to transactions. To our loyal audience at home, thank you for watching Kenanga News. We hope that you received new and interesting information for today related to futures contract. Hopefully, if interested, you might do a self-exploration on other Islamic derivatives product. See you next time. I am Alifah Iliana.
And I'm Nurin Harani, report for Kenanga News. Thank you.